You know, I typically don't like to resort to prop videos, right? I don't go for that TikTok thing where you come up with a lot of gimmicks just to get people to watch your videos. I kind of think that the logic that I'm expressing here kind of stands on its own. However, this is so important, I figured let me pull out all stops and show you what I'm talking about. So, imagine there are two houses to buy, both of which are in Albuquerque or both of which are in Rio Rancho. One is a new house with a full warranty, brand new everything, and one is a resale house 20, 30, 40, 50 years old. Ask yourself this question. Which house would you rather buy? The new house, right? But you're thinking the newer one is probably more expensive. Your parents told you, hey, you can't afford a new house. You don't deserve a new house. You shouldn't buy a new house. You shouldn't look at them. Buy an old house and fix it up, right? So their advice was, a little bit correct in a certain sense, but in a general sense, it's really not correct. Let me show you what I mean. There are a lot of builders nowadays who are offering you what's called a buy down. So let's say the market interest rate is 7.25. It may be different on the day you're looking at this video, but for the sake of discussion, let's call it 7.25, right? And let's say on that same day, a builder will offer you a brand new house with a 30-year fixed rate mortgage at, say, 4.9 or even 5.25 or lower, right? The difference between the interest rate that the Bank of Albuquerque, Bank of this, Bank of that, Citibank, Bank of America, all the banks are kind of right around the same rate. Those rates are going to be over 2% more than the builder. Now, what does that mean to you? It means on a $300,000 loan, you're going to pay about $400 a month in interest more if you buy the used house, the resale, okay, versus the new one. So, 100, 200, 300, 400. Now you might say, what are these 200s for? Well, what if you buy a larger house, $400,000, and the loan on that house is larger, so the savings will obviously be larger because they're charging you a lower rate but on more money. $500, $600 a month. So what I'm saying, guys, is this. It's really important to look at the financing. And when you sit down with me, I will show you a strategy and I will take you on a tour of all the builders who might be available at sometimes 3.9, sometimes 4.5, sometimes 5.0, right? All of these options, while the interest rates are like 6.75, 7.25, 7.5, and so you're saving 100, 200, 300, 400 or more each month. Now, guys, I know what you're thinking. Yeah, is it really a lot of money? Well, here's how it is a lot of money. Because the house you buy, whether it's a downsizer or a brand new house for a first-time buyer, you're typically thinking about keeping this house forever. And you might say, yeah, what if I decide to move to another state? Great. Keep the house and rent it out. What if I'm older? Great. Keep the house, pass it on to your children. When you can get a mortgage rate 2% lower than the market, that's what makes it worth keeping the house. That's why 3-4 years ago, no one was selling their house because they all refinanced at 3%. So let me give you an idea of what we're really talking about. So let's say $400 a month, right? Well, $400 a month at the end of the year is $4,800, right? At the end of 10 years is $48,000, and at the end of the 38-year, hold that thought. At the end of the 360 months or 30 years, you're talking over $140,000. That's if you're only saving $400. If you're saving $600, it's closer to like $200,000. And obviously, I could do the math for you right in front of you on an Excel spreadsheet, or you could do it yourself if you know how. But guys, this is a real thing, and no one's talking about it because most people just don't think about it. They're just looking at, oh, look how pretty this house is. Oh, look how cute it would be. How much fun would it be to fix it up? Okay, without even at all considering the ramifications of your financing, right? Some people just don't know it even exists. But some people know it exists and they don't understand what a big deal it is. So what I'm telling you is simply this. If you're looking for a house, call me. My name is Avery. They also call me the new home guy in certain circles. I'll sit down with you either by the phone or at one of the houses or at my office or at the lender's office. We'll go over the numbers and see what you can afford to buy on a resale and what you can afford to buy on a new home. And then from there, you make the decision, and then I'll take you on the home tour, the new home tour, which will basically show you at least 5, if not 10, different developments with brand new houses. Another little prop just to remind you guys, right? This is real money we're talking about, guys, real money. So that's what I do. I get people houses and I save them money all day long. Okay, talk to you soon.